All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan. Today we have something a little bit different for you guys. We're going to look at 3 companies that have gotten massacred, and we're going to see if they are buying opportunities. And more importantly, we want the community to get involved. So you're going to put in your vote of what you're going to do in the comments, see if it's a good idea. All right. The companies we're looking at are Snap, Twitter, PTON.
Yeah, it's kind of more like choose your own adventure kind of book, I guess.
Yeah.
All right, if you guys enjoy this kind of content of Two Stupid Guys Trading Stocks, by all means, give us a like and subscribe below. We'd love to have you guys along this adventure. With that, we'll get to it.
Two Stupid Guys Trade Stocks.
I like that you used our worried expressions for this picture.
Well, some of these graphs are quite worrying. Before we start this, is it Finn McCool that was hating PTON?
Yeah.
Hey, man, I know you've watched a lot of our videos. If you're still shorting, good for you, man.
Yeah. I know he shorted them a couple months ago. I think successfully too, but I'm not sure he stood in that trade how long.
But I hope he is. If any of our users are watching, they're making money. Let's go for it.
Nice.
That's awesome. So, should you buy the dip? Right? These are some things to consider. Just because these tickers were higher does not mean they deserve to be. This was my biggest lesson of 2021. Right? Are they oversold if you're trying to go for a shorter opportunity? And is this a swing opportunity, or is this a more of like a 6-month hold or longer, i.e. BABA for me and Vinny?
Yeah.
Right?
Exactly.
So, or is this super quick? Hold it for a week, make $10.
Yeah, exactly. Sometimes that works. Even if you don't believe in the company, you can certainly make some money in the short term.
I'm really excited to see how you do with these. So the format of this, we're going to go over each company, quick earnings highlights. We're not going super in depth. Otherwise, this is going to be a 40-minute video, right? Quick analysis, just kind of earnings highlights, looking at the chart. And then we're going to go with A, what are you going to do? And B, I want our users commenting. You steering clear? You going for one of these? What's your buy target? Where are we looking at? All right.
Yeah.
So Twitter, recent high, $68, down to 53, marking a 22% decline, 10.7 in 1 day.
That hurts.
All right. Snap, recent high, all-time high, actually, 83.34, down to 53.17, marking a 36% decline, 26% in 1 day.
Wow.
Here's the worst one. Recent high, 118, down to 55.64, marking a 53% decline, 35% in 1 day with extended session.
Yeah, that hurts.
Oof.
I think the lesson here is all these companies are like your high multiple PE kind of companies with tremendous growth. And the problem is if they miss any of the growth numbers, they get punished by the market.
Punished. Absolutely punished, yes.
Yeah.
So these are the 3 companies in question. When I said recent high, I just went in the last 45 days. What was the high?
Okay.
All right, let's go. Let's start. Twitter. Earnings highlights. Shares drop on news that its average monetizable daily users increased to 187 million, only up 1 million. That's what Vinny just said. Low growth.
Yeah.
Analysts expected 195 million.
Yeah.
Okay. Third quarter net income of 29 million compared to 47 million a year ago. Revenue rose 936 million from 824 in the year ago period. Ad revenue rose 15% to 808.
Okay.
If you remember, this didn't have I'm going to say 10% wasn't a crazy drop. Comparatively to the other two, this was a smaller drop.
Yeah. Moderately sized. Understood.
Moderately sized.
Yeah. That's a nice graph. That's some pretty steady growth. Nice upward trajectory here.
Nice upward. Yeah, they're having a little bit of issue. 2021, their stock has been kind of all over the place.
Yeah.
But that is the revenue. Here's your users.
A little flattening of that curve.
Hoping for a high PE multiple stock.
Yeah.
Right.
All right. Twitter users versus competitors. What is this trying to highlight for me? Oh, in terms of the total number of people.
Understood. Yeah, total number of people.
Yeah. So a lot of growth opportunity here. Not really that big compared to many of the other platforms out there. Okay.
Yeah. Snap. Once again, these are quick, so we can make this like 12 minutes. CEO comments global supply chain interruptions and labor shortages reduces the short-term appetite to general additional consumer demand through advertising. In addition, Apple screwed us. Their iPhone privacy changes disrupted its advertising business.
Yep.
All right. Fourth quarter projection of 1.16 to 1.2 billion, short of about 200, ish million to 1.36 billion. Snap's net low spelled wrong, narrowed to 64% to 72 million from a loss of 200 million a year ago. They're still losing a bunch of money.
Yeah.
That's a lot of money.
I understood.
But opposite situation here, right? Twitter's financially more healthy. Snap is still killing it on the user demand. They're expecting to reach 316 to 18 million users in fourth quarter, ahead of the 312 million analysts. So opposite problems.
Okay.
User growth strong, beating analyst expectations, and it had its fourth consecutive quarter of at least 20% year-over-year growth, not you growth. So
yeah. Oh, wow. Yeah, that's a nice graph. Definitely, it'll be interesting to look at this from like a demographic standpoint too. Is that Snapchat certainly favors a younger audience. Facebook has struggled in order to acquire, like younger folks. So it's definitely interesting to me from that standpoint. Twitter, I'm not really sure what their demographics look like.
They're a little bit more all over the place. Snapchat was really, really heavy in the 13 to 16-year-old range.
Yeah. But is it a product people continue to use like once they age out of that range? That's the question.
It's true. The revenue, though, is pretty. Well, hold on. It's still negative.
There's still positive, but
there's still a net negative company, but the revenue is pretty decent.
Yeah. Okay. I'll wait till the end, but okay.
All right. Nexties. PTON. This is the crazy one that's going over, right?
Yeah.
So full year sales 4.4 to 4.8 billion instead of 5.4 billion. That is quite the miss. All right. 3-month period ending 9/30, PTON reported a net loss of 376 million compared to a net income of 69 million the year earlier.
Mm-hmm.
Analysts were looking for $1.07 per share loss instead of $1.25. They missed revenue, 805 million instead of 810. That's not too bad. It's close.
No.
Right?
If you're a hyper growth company and you can't meet the hyper growth, that's where you get punished.
Yeah. Connected fitness subs completed 16.6 workouts per month, down from 20.7 a year earlier, but had 2.49 million connected fitness subs, up 87% the year earlier.
Wow.
Sales marketing increased 148%, representing 35% of their revenue. 35. That's the part I was waiting for you to get to. Yeah, you hate incompetence.
Well, it's not incompetence. I mean, I don't know. Like, I hate flagrant or spending, in my opinion. So, are they trying to kind of make up for their tread PR disaster? That maybe that's a possibility of why their spending increased so much.
No, they also cut their bike by 20% to make it more palatable.
Yeah, that's an interesting thing. I know their net margins contracted. I think I saw in a news report somewhere too, which is right there. You have it in here too. Yeah, the margins down 12%. That's going to be part of that. It's like it's unfortunate. You're trying to create this premium brand, and now you start cutting prices. Like, when's the last time you got a discount on like an iPhone?
Yeah. I feel you. Also, do you think I'd leave out their gross margin? That's one of your favorite things.
I know.
Gross margin fell to 12%. It was 39.4% a year earlier. That's a lot.
Cut their prices, right? Yeah. Eventually, if they have enough, exercise bikes out there, they're going to be generating that high gross margin income from the service. But still, like, I don't know. I don't know if that's a great move. And then this massive spending on sales and marketing, I don't know if it's part of their holiday push or if it's more just like they said, they're trying to make up for the fact that they have some negative PR surrounding their tread product.
But there's a whole nother slide here, man. There's some more spending we're going to go into. Wait, hold on. Go back. Shares of Planet Fitness hitting record highs. We're going to show that. That's important. People now want to mingle. And they cut their subscriber projection a fairly hefty amount from 3.63 million to 3.35-ish. Mm-hmm. Okay. This is pretty funny. So when I'm doing the research, and I was just looking up old articles, right? A year ago, articles were being written for its map to 100 million subs. I'm talking everybody, CNN, CNBC, Kramer, everyone's like 100 million subs, 340, like crazy projections, right?
Yeah.
They're now slashing those already, and they're at 2 million and change. They may have spread themselves too thin with their $420 million acquisition of Precor, or whatever it was called. In addition, Peloton board director Howard Draft quits the same day the company audit was approved, giving 4 days notice. He resigned immediately after he and the Peloton's audit committee approved the company's financial statements. That's not great.
I mean, it might mean nothing, but
I don't like it.
Yeah, it's interesting. Like where you got this from? Do they have any sort of like reasoning behind it, or did they just kind of throw this fact out at you?
It was fairly new. Yeah, it was. But more importantly, and I want to emphasize this: Planet Fitness is killing it.
Yeah,
they are. I didn't go into their details or anything, but we're going to look at their graph when we look at PTON's graph. First, we'll do Twitter.
Interesting.
All right. We have our dip ones. Now, if anyone was watching, the last time I recommended a buy a dip, it was Nordstrom at $26. It's at $32.
Nice.
Guess who didn't buy it?
You. Okay.
I was like, my money's tied up.
That happens, my man.
Great. I'm too busy shorting the queues like an idiot.
Yeah.
Twitter. Here we are. This is that big kind of decline. Let me get rid of some of these lines. They're chilling around $53. They have been here before. They definitely have some support, and they have taken big, drops before in the past and then gone back up.
They did fill that gap.
They did feel that gap. Here's the weekly chart. So they have been here for, a long time. They have absolutely filled the gap, right? Not terrible. All right. Go back to your choice, Vinny.
Yeah, interesting. I'm gonna say on this one I would steer clear.
You're gonna steer clear?
I'm gonna steer clear of Twitter.
I'm buy for a quick swing, maybe.
Yeah.
So go back to the graph real quick. I don't think it's bottomed. I don't like that we had this big bar. It's putting up weak fights to get back up there, and they were increasing the volume again towards the downside. So mine is not a buy and hold. Mine's a wait. What was the option? Go back.
Buy, but
wait for it to go lower. I'm that one.
Okay. Interesting. All right. So next is Snapchat. So from my standpoint, I actually want to do a little bit more due diligence on Snapchat because
I agree.
I think it still has more room to go from a financial standpoint towards the downside. We'll look at the chart here, but I think it's a potential to get ahead of like a generational rotation as Facebook really has an older demographic and has really struggled to acquire them, younger folks. And I think Snapchat has actually done well in that demographic.
I agree. Here's their graph. They're sitting around 53. They also have been here before, just like Twitter. They've definitely had their highs and lows with quick dips. Not so much that big of a mess, but they have definitely had a lot of shares traded at this range.
Interesting. It's funny they gapped up and then they gapped back down.
So they had a big one up here. So
now does that make it more likely that they will have a tendency to want to fill that since it's existed for so long? I guess that gap.
I would say, and you'll know by my answer here, I think that this is a swing trade stock that I would choose where your risk to loss is not terrible. My stop loss would be like 51.20, $2, buy 100 shares, lose 200, but your reward is about around the 200 average. That's $1,200. That's a pretty good.
Yeah,
actually, it's more than that.
Yeah. So on this one, I guess you would say buy for a quick swing. I think that's reasonable.
Buy for a quick swing.
And potentially, I'd be looking to do some more due diligence and looking at a longer term as far as like
buy for sure. Yeah, for sure.
All right, and then the last one, Peloton. Interesting.
This is not Peloton. This is Planet Fitness.
Wow, this is Planet Fitness.
I just want to show you this real quick. They murdered it. I didn't go into it. They murdered earnings, coming all the way up, way up here. I believe that this is all-time highs. Yeah, I think this is all-time highs. Yeah, this is all-time highs. And on heavy volume, they're murdering. Obviously, this was COVID here. So let's look at the one that matters.
Oh God.
This is depressing for anyone that was in this. I'm sorry if you were in it. This is, I don't ever want people to lose money, but this is pretty rough.
Yeah.
I'll even go to the weekly chart. Look at that. We haven't been down here for, 2 years.
Yeah. But there's still decent selling volume, right? And it looked like there was still a spinning top there.
Actually, I'm glad you noticed that, man.
Yeah.
Crazy volume, right? And a spinning top, even when it opened and tried to make it up. Kramer said, wait for the next bump up and sell everything you have.
Yeah, I'm thinking that there's more weakness to come in Peloton, so this might even be shortable. I think still.
Oh, I didn't say that option. I was hoping you were going to say that.
Yeah,
I wasn't super clear. I'm a buy, but the opposite direction.
Wow.
I was just going to short it.
All right, interesting. Well, I mean that's definitely a I guess it's crazy to think that stock has fallen that much, but from a technical standpoint, it still looks like it has that much more to go in terms of kind of chart analysis. From the company standpoint, they have too many headwinds for me to really want to be interested at this point in time. Because they're struggling with their brand because they're cutting prices, and obviously you have this kind of rotation back towards normal stocks, which both my Las Vegas Sands and Carnival Cruise Line calls were up on Friday. But yeah, I don't know. Peloton is not one I'd be interested in.
I actually, in my account, I think it'd be cool to short it. I'm not going to do it just because it's fallen so much, and just because I think it's fallen more. It has fallen a lot, over half. It's lost $6 billion in market cap, or whatever the number was. So I'm just not going to touch this. I'm out.
All right, guys. Well, let us know. Vote down below. Let us know what you think about these 3 tickers.
Yeah, let us know. And if people like this, we're gonna look at Chegg, Roku, and something else next week.
Yeah, sounds good.
Have a good one.
Catch you guys in the next one.